How's it, guys? It's Linton here. Hope you're well. This morning I mentioned on my traders community, the link is below this video in the description if you'd like to join. It's free of charge, and there's a lot of guys on there with a lot of knowledge, etc., that we all learn from and that we share with, and it's a really good community for growing your knowledge as a trader. So feel free to join via the link in the description below. But this morning in the group I mentioned to the guys that I would chat to them about compound interest and what it is and how you can use it to your advantage in trading. We've had some guys talk about some astronomical returns, and as we know, as traders, although it is possible to turn a very big return on your trading account over a week or a month, maybe even 2 months, the chances of you doing it sustainably over a period of time is not very good. And this is where compound interest comes in. I feel that everybody wants to make money exceptionally quickly, and they don't think about the longer term projections when it comes to trading. So without further ado, let's get into what compound interest is. So the Wikipedia definition for compound interest is the addition of interest to the principal sum of a loan or deposit, or in other words, interest on principal plus interest. In layman's terms, guys, it's interest on interest. And what that means is, how it works, is let's take an example, and I'm being generous here. We're going to look at a bank, for example. You put your money in a fixed deposit with a bank, and you get a rate of 10% per annum. It's unlikely that you'd get that much, but let's be generous towards the banks and say, okay, you're going to put 10 grand into an account and you're going to get 10% per year on your money. So after year one, if you take 10,000 Rand and you add 10% to that, your money would be worth 11,000 Rand. So you've made 1,000 Rand for that year. If you then take that 11,000 Rand and you add another 10% to that, and this is where the interest on interest comes from. So that's compound interest. So now you aren't only earning interest on 10,000 Rand anymore, you're now earning interest on 11,000 Rand the following year for year two. So if you add 10% to that, you now have 12,100 Rand. Can you see that you earned 1,100 Rand as opposed to just 1,000 Rand in year one? Now that's compound interest, it's interest on interest. Year three would be 12,100 Rand plus 10% equals 13,310 Rand. So you can see each time you add interest on a compounding setup like this, you are increasing the monetary value for each increment. And that's the power of compound interest. Warren Buffett, who everybody knows is a very, very successful investor, he had his first compound interest investment, I think, at the age of 15, if I remember correctly, when I watched a documentary. So he knows the power of compound interest. He's harnessed it, and he's really used it to his advantage, leveraged it. So let's take a look at an example here. So we've already figured out what interest on interest is, what compound interest is, and we've had a quick look at the first 3 years of a compound interest investment of 10,000 Rand at 10% per annum. So we're going to look at it over 10 years. And there's a reason why I'm showing you this. We'll get to it just now. So year one, we've already calculated, was 11,000 Rand. Year five would have been 16,105 Rand. So there you've made a total profit of 1,105 Rand and 10 cents. Okay, so that's how much money you've made. Now bear in mind that inflation still needs to take its course. So in 5 years from now, what is 10,000 actually going to be worth in terms of purchasing value? So I don't think that 16,000 Rand is actually a very good investment, even at 10% per annum, which is difficult to get. Year 10, you'd have a whopping 25,937 Rand. So let's call it 26,000 Rand. You've made 16,000 Rand on your investment over a period of 10 years. Now in 10 years' time, I can tell you that 26,000 Rand is probably going to be worth less than what 10,000 Rand is worth today. If I look at fuel prices and I look at how inflation has affected us over the last 10 years, think about what a litre of fuel cost 10 years ago as opposed to what it costs now. And then you can do this sum and you can figure out, is it worthwhile investing your money like this? Now, obviously, a lot of big investors do, but guys with a lot of capital can look at this type of option. Guys who don't have the capital, like most of people that get into trading, we don't have this type of capital that it requires to make money with this type of return. So we've got to look at trading as our solution. And how can we benefit from compound interest in a trading environment? Well, the first thing we need to understand about compound interest in a trading environment is it's not actually compound interest, it's compound trading. So what you're trying to do is you're trying to achieve an average of a certain amount of performance every month. Okay, so generally speaking, if you invested money with a bank, they'll take that money, they'll invest it elsewhere, they'll make higher returns, and you'll get your 10% per year if that's what you are promised. Whereas with trading, you can take your money, invest it into stocks, into shares, into currencies, into indices, commodities, that type of thing, and all of the profits that you make from those trades you'll keep, less the broker fees, of course. So I mentioned in my community this morning that my target per month is 5%. And I know a lot of guys look at it and think, but you're not going to make any money, making 5% per month. But that's where we need to learn patience as traders, and that's where a lot of people need to learn patience. Understanding the bigger picture in terms of what compound interest can do or compound trading can do for your capital is really something that can open your mind to the possibilities of trading. So let's have a look at the same investment, 10,000 Rand. We're going to compound this at 5% interest per month for the same period of time. So remember, with the 10% per annum, we went from 10,000 Rand to 26,000 Rand in 10 years. Okay, let's have a look at year one. So year one, 17,900, let's call it 18,000 Rand. An effective return for the year of about 80%, which is massive. It's already, if you look at the banks giving you 10% per annum, just achieving 5% per month on your trading account, compounded, gives you 80% for the year. So if you take 5 and you multiply it by 12, you get 60. So the extra 20% has come from the compounding effect. Let's have a look at where we would be in year 5. So year 5, you can see we're already far ahead of the 10-year projection with just a normal 10% per annum return. So year 5, we're sitting at 186,000 Rand. Now, I don't know about you, but now that's starting to look like a bit of money. And if you compare 186,000 Rand in 5 years from now to what 10,000 Rand is worth now, you're going to find that 186,000 Rand is worth a lot more, even in 5 years' time, than what 10,000 Rand is worth now in terms of purchasing power. And year 10, I'm going to have to show you what year 10 looks like. This is going to blow your mind. So let's go and have a look at where we're going to go. I think this one will be the easiest. So if we have a look at a compound interest calculator, and we use the one that I like to use, it's just simple and easy to understand, and we start out with 10,000 Rand as our investment. We're compounding it at 5% per month, and we're going to do that for 10 years. Now remember, this is without any additional deposits. So we're not adding a monthly deposit of any kind. We're just investing or starting a trading account with 10,000 Rand, and we're aiming to achieve 5% per month on that for 10 years. No additional deposits, but mind you, you also need to be mindful of the fact that no withdrawals. Withdrawals impacts compound in a huge way. And we did have a question about that as well, so I'm going to answer that too. I'm going to click the calculate button. I want you to take these figures in. So the end result is nearly 3.5 million Rand from 10,000 Rand over a 10-year period. And that's achieving 5% per month and nothing more. You don't need to achieve more than that to turn 10,000 Rand into 3.5 million Rand in a 10-year period. And I can tell you that 3.5 million Rand in 10 years from now is going to be worth a lot more than 10,000 Rand today. Let's have a look at the breakdown just in case, you're wondering how it gets to that. Now remember, we've already looked at year 5, 186,000 Rand. Okay, so these are your increments from 10,000 Rand to, let's call it 18,000 Rand, 32,000 Rand, 58,000 Rand. Here in year 4, we've broken 100,000. Year 5, 186. Year 6, 335. And this is where it starts to get interesting. Remember that the monetary value of each increment goes up because the capital is going up due to the interest received. Year 7, 600,000. In year 8, we break 1 million. So we've got 1,081,000. Year 9, nearly 2 million. From year 9 to year 10, it almost doubles. So can you imagine if you do this for a period of 20 years, what that's going to look like? Now, I'm not going to run that figure because it looks almost ridiculous and you won't believe me. But guys, you're welcome to go and find any compound interest calculator that you want to go out there and have a look at these figures. Make sure it's accurate though. Make sure that you do the first couple of years yourself, add it on a calculator, 10,000 Rand plus 5%, plus 5%, plus 5%. And what you will get to is your first year figure after 12 5%. You'll get to your second year figure after 24 5%, etc., etc. So it's going to be 120 times plus 5% to get your 10-year figure. And this is accurate, I can tell you now. Now, for a lot of people, that's life-changing money. And I think that's where a lot of traders are losing focus, is everyone's trying to turn 10,000 Rand into 100,000 Rand every day. And they're not thinking about the long-term effect. In 5 years' time, you're still going to be depositing that 10,000 Rand, hoping to turn it into 100,000 Rand. Whereas if you just made 5% per month, you would already be sitting on nearly 200,000 Rand. And I think that's a mindset that traders are missing. The question I had this morning, though, and it's a valid question, is what if this is my only source of income? How do I move into using compound as well? Well, the honest truth is it's a difficult thing to do. It's not easy. And the reason I'm saying that is because it's a situation where you've got to look at having 2 trading accounts. One trading account, you trade with a certain type of risk and you're looking for a certain type of result. And the other trading account, you trade with a much lower risk, looking for this compounded result. So you've got to get yourself into a position where you mentally can do that, and that's the challenge. So you've got to trade one account to try and make your ends meet on a monthly basis, and then you've got to try and trade the other account along this compound interest model. Guys, you can obviously change the percentage on this calculator if you want to. I quite often achieve higher percentages. In fact, over the last number of years, we've achieved around about the 7% mark. So if we do 7% with 10,000 Rand over the same period of time and we calculate it, the figure drastically changes from 3.5 million, 33 million. So it changes drastically with every little percent. And that's why I say you can really make a good income for yourself simply by applying compound interest to your trading. Hope that helps you to understand where I'm coming from. If you've got any questions, post them in the video below. And remember to join the community via the link in the description below as well.